Hey everyone, it's Degenerate Dividends, and today, October 12th, on Monday, I'm currently invested in my 40% challenge stock. So, what is the position, you might be asked? It's coming out of left field for those who follow me. I have not mentioned this stock at all, ever in my career, in YouTube, in dividends, anything. This company, ticker symbol LLNW, Limelight Networks. What is Limelight Networks? They provide content delivery services. So we live in the age now where we're starting to stream everything, and this is a company that helps other companies get into that spot, aka get them into the limelight. So they help with a lot with video games, with video development companies. The list goes on. There's a ton of companies, I shouldn't say a ton, there are a lot of companies that use Limelight Networks, and they're just starting to get into the spotlight a little bit. They also offer edge cloud services, so they're getting involved with cloud network and cloud computing. We all know there is a market to be had and growing within cloud computing. So Limelight Networks, if we look at the 5-year chart, we can see it has been on the up and up. It's up 200% in the past 5 years, but the most interesting part of the 5-year chart, if we click the technical indicators on Robinhood, you can see on the bottom here that the volume is vastly gaining steam. This company is finally starting to, dare I say this word again, just to use the pun of it, get into the limelight of the investors. This was a penny stock for a long time, and the company is finally starting to see the appreciation that it deserves. Now, Limelight Networks is very interesting. So you can see right here, market cap, and again, Robinhood can be a little bit finicky, but I'm looking at Yahoo Finance as well, and it does agree. The market cap of Limelight is only $774 million. So this is definitely a small cap company, not even $1 billion market cap. But the interesting part about it is, I believe it is greatly undervalued. You're looking at the analyst ratings right there, 90% buy rating and 10% hold rating. Everyone is saying to buy Limelight Networks. And the glorious part, the part that I really love and I look for with these growth stocks, is the price target analyst. All of them, price target analysts, the analyst price targets are all above the current price. So the current share price, as you're seeing on screen right now, $6.35. Well, the lowest price target from the analyst that gave a stock price target is $7.60. That is the lowest. And the highest ranges to $10. So the stock is currently trading below every analyst price target that review this stock. And hedge funds are really starting to pick up on Limelight Networks. They have increased to 31 hedge funds that have positions. Just a couple of years ago, that number was only 10. So hedge funds are starting to pick up on Limelight Networks. So I believe there is a lot of room to run in this company. So as we stated earlier, the market cap is $774 million. And the quarterly revenues for the past 2 quarters, so quarter 1 and Q2, were each around $59 million. So they're looking at about a $200 million plus annual revenues with a $700 and change million market cap. And the reason this is so interesting is because its main competitor, Fastly, if we go to Fastly, this one has seen hyper growth, right? It's at $126. It's up 690% the past 5 years. It was hovering around the $16 to $20 mark for a long time, and it exploded, and it's at $126. That market cap of $13 billion. That's pretty crazy. And if I do a quick search here, let's get a quick search. Fastly. I had this up earlier, but I just want to double check myself. So it has a market cap of $13 billion, and their annual revenues are around $200 million last year, which is exactly what the revenues for Limelight Networks were, around the same amount of revenues, total revenues, $200 million for 2019. And Fastly is not profitable at all. Limelight Networks is profitable. It's already profitable. So Fastly focuses a lot on hyper growth, really growing that top line. Limelight Networks does not have the super growth that Fastly does. You can't argue that. But Limelight Networks is consistently growing. And the CEO of Limelight, during his earnings calls, have stated that we are looking to grow 15% each year. And look, that is very sustainable. Fastly, yes, it might be on a hyper growth trend, but is it really sustainable? I don't think so. Especially because Limelight, it's getting rave reviews. I'm looking online here. Of the 1,500 plus reviews, it is rated 4.7. The companies that are using Limelight Networks are loving it, and they are already profitable. They are building up a great infrastructure. Their balance sheet is fantastic for a company like this. They have around $12 million in debt, but they're sitting on $18 million of cash on hand, so they could pay it off really rapidly if they want to. They don't need to, though. So they have low debt. They are already profitable. They are still growing top line. And the companies that are using them are loving the product. We have earnings coming up. It could be a big boost. I believe they're coming up in about a week or so for Limelight Networks. So it should be very interesting. Just to give you an idea of the companies, some of the companies that use it. Nintendo uses it. Authentic Gaming. We have, I'm just looking at the website directly here. We have DirecTV. Fasig Tipton, which I know personally because that's horse racing. Fathead, the people who make the big sports mascots that you hang on your wall. Kodak uses it. Pokemon for Nintendo. That's ultimately where they ended up using it. Olympus, Roku, Sandals Resorts. We have L'Oreal, McGraw, Western Union. There's a lot of known companies that use this, and they are continuing to expand the amount of customers that are using their content services. So, look, this is no doubt an aggressive play. This is a very volatile position. And I'm buying, if you're looking at the 5-year chart, I'm buying towards the top, okay? I am buying this. But all the indicators, if you're looking at the 1-year chart, say that this should be a great long-term play, both technical and fundamental. So that's why I really like this position. My stop loss is going to be set at around $4.75. That's how low I'm willing to buy this position at. If it goes below that point, I think that the company is in serious trouble. So I'm looking to ride this to 40%. Now, look, if something were to happen where I get like 25% really fast, I'm going to reserve the right to sell the position or at least set a stop loss, because if it rises really fast, which is something that this company could do, especially given the industry that it's in, its competitors, and how fast they have quickly risen, I reserve the right to, cut it off before 40%. But I do have a problem with letting my runners run. So I'm going to try my best to just ride this one out. So I might be in this position for a very long time. And if it starts to dip, I am going to buy more and more shares. $6.35 means that you can accumulate a lot of shares very quickly. I love this space. I love the direction that this company is. And I love that in this space, they're one of the very rare companies that's profitable and has an excellent balance sheet that gets very overlooked. They are not getting their just desserts. If you're going off other companies, specifically Fastly, this market cap should be around $2 billion. It really should. I know they don't have the quote-unquote hyper growth that Fastly has, but they are growing, and they're doing so at a more sustainable pace. And not only are they sustainable, they're already profitable. So what is there to worry about in terms of financial burden? So a company that is completely immune to the pandemic because it's all about streaming at home services from big corporations. They're going to continue to grow. They have a great product. And I'm really stoked about getting into this position, researching it all yesterday and all this morning. I'm not even kidding. I researched for about 4 hours this morning. And I was between this and CarGurus. And CarGurus, I looked at the app myself. And a lot of people, including myself, were having issues with the position. So, with the app. So I ultimately went with the better product, in my opinion. And I think this one has more potential anyway. I think this one has if you want to call it home run potential. I think it does. We'll see. I could be eating my words here, but hey, I'm putting it out on YouTube. I'm putting it out to the public. Limelight Networks is the one that I am absolutely investing in. So I have pretty much my entire equity. If we go here and click the equity, I have pretty much my entire portfolio. I only have, if you see there, $4 left in my portfolio. I am all in on this position. So it'll be very interesting. Hey, look, it's going up after hours. That's nice. But I am all in this position. By the way, I got pretty lucky on DraftKings. I was holding that, and I was able to sell for a nice 3% gain from my earlier purchases on Friday. But hey, that is my position. Hope you enjoy. Let me know your thoughts and feedbacks down below. If you are personally invested in Limelight Networks, why or why not? If you're avoiding it. If you're invested in Fastly, let me know why you would prefer Fastly over this one. I'm always interested to hear the comments, and I'm always interested to see if you guys have any suggestions for stocks that I should look into. So hope you enjoyed this video. Welcome to the 40% challenge. We'll see if we can get there.